Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd Pianin, with over $2 billion in funded loans.
Holy smokes, there is a lot going on. Happy Sunday, but before we talk election, before we talk Trump, before we talk housing, the most important thing we can say is Happy Veterans Day, and thank you to all the veterans. You're listening to Real Estate Exposed with Daniel Beer and Todd Pianin. Todd, I know you take Veterans Day more serious as anybody else.
Yep.
And what a great day to be on the radio following not only the election and so much to talk about, regardless of how you feel of the result. We now have to live with it all together, move forward, and we're going to
talk about that a little bit.
And it's Veterans Day we just passed, and that is very suiting following an election.
It's very suiting following an election. You think about, we salute all of our veterans. I mean, especially at Home Street Bank. I mean, we take our veterans very serious. I mean, we want to take care of them. There's lots of chat. We make sure they get good loans. But I mean,
you guys do phenomenal VA loans.
We do phenomenal VA loans. But besides that, it's just the fact that to me, what they've done for our country and the support that they have for our country is just it's just unbelievable.
And something I'd be saying, regardless of who won the election, because this isn't a political show, though politics and policy definitely plays into the housing market, right, which is what we're here to talk about. But regardless of who would have been the winner, I'd be saying that hopefully one thing this president will do is treat you, our veterans, better than what we've seen in the past.
They need to revamp the system.
Get you all the support, the help, and the love you deserve, and the gratitude. So
I think they need to revamp the system. I mean, I know many veterans who go to the hospital, who've gone to the VA hospitals and stuff like that. It's just not right, Dan. I mean, it's just not right how they do stuff. But glad to have you back in the studio, Dan. We missed you last week. So, we kept talking, we had two special guests from your team here last week, Joe McShane and Josh Kim, which were awesome and fantastic. But I mean, what a wild and crazy week we just had. So, and who on this show, who called who is going to be our next president?
Todd. You did. You called it. You called it. So why don't we start with you?
Okay.
You called it. So what are the early effects of a Trump presidency on housing that you see?
Mm-hmm.
And maybe, I'm not going to ask you for long term because I don't think my crystal ball is that good, so I won't ask yours to be that good.
Perfect.
But what about short term and, medium term outlook on housing and interest rates and the effect it will have on our listener moving forward?
So what everybody is frightened of right now, and we've seen a volatile week in the bond market, and what everyone's talking about is inflation coming back into the marketplace. And why we'll have inflation? It's the first time in a long time that we've had a Republican president, Republican House, and a Republican Senate. And so
when is the last time? I don't know. I don't know if you're aware of it or not.
I don't want to be fact checked on this, so I'm not. I think maybe Reagan.
It's been a long time.
Maybe. I mean, Clinton had Democrat, right? So he got a lot done. So a lot of people are very concerned about inflation. Wall Street's very concerned about inflation. What inflation means for you as the consumer is prices go up. The reason they're thinking that is that, Trump said he's going to lower taxes, which means you're going to have more spendable dollars. He's going to do some health care reform, which means that would potentially drop health care prices, which, again...
Well, you would sure the heck hope so, right?
Hope so.
I know people whose premiums are up 30%, 60%, 70% year over year. It's amazing what's going on.
It's crazy in that.
So you'd hope that would be fixed. And again, that's not political, but rather
just poignant.
It needs to be fixed.
But I mean, it's a lot about inflation. It's all about inflation right now. Wall Street reacts 6 months in advance. I also think it's an overreaction.
They overreact.
Yes, and I think that we're going to see we're going to see a drop. We'll see a dip, I think, Dan, either the end of this quarter or we'll see first quarter next year. We'll see a pretty big drop in rates again. It'll be a little boom, but then we're going to because there's global. Think about it. We're in the past.
I'm pulling my pen out. I'm writing it down. Todd said today.
We will see a drop.
November 9th.
November 9th, Todd's saying that we will see a drop in interest rates before the end of the year or sometime in the first quarter
and
next year.
I think I drank too much eggnog because I just said November 9th. So November 13th.
Sorry, you did.
And you followed my lead.
Sorry, you did drink too much eggnog. I predict. I predict and know that we are going to see a drop in interest rates. We will see it. It will come back. The reason is, if you think about this, Dan, I called you the night before, the night of Brexit. We were on the phone. You and I were on the phone. We were going through a lot of your clients on who we should get locked in and who we shouldn't get locked in because we knew we were going to wake up in the morning and we were going to see a massive charge in the money money going into Treasury, right?
Right.
We are now a global economy. If you think about what's going on in the globe right now, they're in recessions, in some places depressions. We are usually the first to come out of that period of time of recession and depression, and then we lead the rest of the world because we are the only superpower. But because we are a global economy, you're going to see a rush of money back into bonds, and you're going to see interest rates drop back down. I'm telling you, and before end of this quarter or sometime beginning of first quarter next year.
No, I mean it's very interesting perspective because it's been a very, very short period of time, right?
Yep.
We're just a few days off the election.
Correct.
But what we've seen so far has been just the opposite. We've seen rates rising actually quite rapidly.
Very rapidly.
We've seen a very positive response out of equities.
Yep.
Especially out of the financials out there, right? All your bank stocks, your Citigroups, and your B of A's, and your Wells Fargos, they're on a tear.
Well, you know why, right? That's happening.
Well, because they're looking at deregulation and
they're looking at getting rid of Dodd-Frank or making major changes into Dodd-Frank.
Precisely.
And also coming up with a better version of Glass-Steagall. Trump has come out and said that he's going to come out with a 21st century version of Glass-Steagall.
So if you know what Dodd-Frank is, it's essentially the post-crash financial regulation that was put in place. And it's really shaped the way in which the financial markets operate and also put into effect governing bodies such as the CFPB.
Correct.
And it was all intended to make it, to protect consumers. That really was the primary reason for it. But just like anything else, after such a bad crash in the market in 2008, 2009, that the legislation really overcompensated.
Went
really
way
became
to the right. Went way
too restrictive.
Way to the right in small businesses.
Or way to the left, maybe better said.
Better. Yeah, sorry. Way to the left. Very, very tight lending standards. Put a lot of regulations in place. A lot of the mortgage industry as well as the banking industry was not prepared for technologically, because historically we're not.
It was basically a big ball of red tape.
Yes.
A massive ball of red tape.
And there's still stuff that's coming down the pipe for Wall Street.
They haven't even been able to roll it all out.
Exactly.
It's been 6 years, and they literally can't roll it all out.
Correct.
Because that's how just bureaucratic.
Right.
And I mean that is like the poster child of bureaucracy.
Correct.
That bill right there.
Yes.
So
poster child of socialism, in my opinion. But
what do you see Trump doing with it? Because I don't think he can actually get rid of it entirely, but I think he will absolutely reshape parts of it and soften it.
Well, I think for sure, as we found out with the PHH case, that the judge ruled that CFPB cannot be an autonomous organization. It can't be a fifth house of government, so to speak. And so you're going to see Trump for sure, if we keep the CFPB, if it stays in place, but Trump's all about killing red tape and killing, expensive stuff. If he doesn't kill the CFPB, they will be reporting to Congress or they'll be reporting to the president. We'll see that happen for sure.
You're listening, by the way, to Real Estate Exposed. Daniel Beer, Todd Pianin. Daniel Beer, your real estate professional. Todd Pianin, Home Street Bank, our trusted mortgage lender and advisor, banker. Todd.
Yes, sir. Back to the CFPB. So if he,
what do you see there?
I think that it's going to probably go away. If I'm not as confident as I am about interest rates dropping.
The CFPB is going to go away.
I think it's probably going to go away. He'll probably get rid of it. He'll probably make a lot of changes to Dodd-Frank.
If he's going to run a conservative platform that would be in line with less government.
Right. He doesn't like big government, doesn't like overregulation, feels that the small business, feels like the homeowner got penalized, feels like, and Trump owned a mortgage company. You know that, right? So when Dodd-Frank came out, don't fact check me on this, people, but I'm pretty sure he closed his mortgage company down.
It was very restrictive.
Yes.
Very restrictive. And just so you understand, the CFPB is essentially another governing body like the IRS, in that they operate very much within the bounds of what they want to do.
Right.
Like they are their own boss.
Right.
And so it will be interesting to see if he pulls that back. What is the effect of him lowering financial regulation on the housing market? That's what we're going to talk about on the other side of the break. And also that's what we're going to talk about at our home selling workshops, which the home selling workshop that we run, which has had massive reception and acclaim by those that have attended. We are doing one November 30th of this month. November 30th. We're offering it at both noon, 12:15 actually, and 6:30. So you can do it during lunch. You could do it after work. It's a Wednesday. This is going to be a special edition of the home selling workshop because we're going to have conversation around. There will be more clarity by then as well, because more weeks will have passed. How does the election affect your housing plans when you're looking to sell in the next 1, 2, or 3 years? Call and get your free tickets. Here's a phone number for you, 800-676-2420. The tickets are free. It's a purely educational workshop where you learn how to net upwards of $62,000 more on the sale of your home than that way of using traditional methods.
Or if you're driving, you can't write down. This is easy. SanDiegoWorkshops.com.
San Diego Workshops, that's plural, .com. Here's the number again, 800-676-2420. Call, get your free tickets, or just call and pick my brain, or pick Todd's. You might have a buying or a selling question, or maybe even just a question on bathroom remodel or just anything real estate related. We're here for you. We're heading to break, but when we come back, how does lowering financial regulation, which we will see to some degree, the only question is how much, not if, how will that affect your housing outlook? That's next. Welcome back to Real Estate Exposed. It is a special post-election edition, also a post-Veterans Day edition. You're listening to Daniel Beer, Todd Pianin. We're going to kick it back to Todd as we discuss how financial deregulation, which will come down the pipe when one, to some degree or another, especially as, it didn't take Trump more than 36 hours after the election to already call out Dodd-Frank.
Yes.
Which is the big regulatory bill that came out after the last market crash. Todd, as all of that financial regulation eases,
yes,
and more creative loan programs come into the market, more, it's just easier to do business, which essentially is the environment we had pre-2008.
Right. Pre-Dodd-Frank.
What do you see happening in the short and intermediate term with housing?
Well, let me just tell you what my partner Taisha and I talk about all the time. We aren't fans of doing jumbo loans right now. What I mean by jumbo loan, that's anything over $581,000 in San Diego County. Reason being is that the over-regulation and the secondary market on jumbo loans is so tight right now. It's practically non-existent, and they ask for so much information that we try to figure out a way to do a big line of credit with using a Fannie Mae First, those types of things. We get creative on those types of aspects, or we use our bank's portfolio program to get some stuff done, or we have some other banks.
Because they just make it that hard to do business?
It's just that hard. Dan, we just did a loan for a high net worth individual that we closed in 21 days. It was a $1.1 million loan that we did for them, but this person was worth like $20 million. And they just raked them through the coals. It was just not the way we like to do business.
So we have a lot of conversation about how loans are not actually that difficult to do in this environment, but it's under that amount.
Under that,
conforming amounts.
The conforming amounts to government loans, FHA, VA, those loans are they make sense. They're make sense loans. You weren't here last week, but there's a new release December 10th on Fannie Mae's coming out with that if you score on it, that you'll get appraisal waivers.
Interesting.
You won't have appraisals.
So what's the effect of Trump and deregulation on just that issue?
I think that it's going to open up the secondary market. You're going to see on the jumbo side. You're going to see a lot of players come back into the marketplace. You're going to see make sense underwriting starting to happen again for high net worth individuals. People realize when in the jumbo market, I think it's going to become a lot easier. It's going to be I don't want to say the Wild West will come back. I think that they'll still be prudent and smart. I think the vintage will still be strong. You'll still have to have good credit. But I think that the income restrictions and the mistakes that people make mistakes all the time.
By the way, if you have a question on any of this and you want to reach Todd, here's a phone number, 800-676-2420. That's 800-676-2420. I'm Daniel Beer with Todd Pianin. You're listening to Real Estate Exposed. Now, when I'm hearing you say that, Todd, I automatically then, if it becomes that much easier to do business and it really opens up that jumbo market, does it mean that we actually start seeing more appreciation in home pricing?
Yeah, that's where I think the inflation comes in, Dan.
So there is a lot of what Trump is saying is very inflation oriented, right?
Yes.
Because he's talking about, well, you're already seeing these rising interest rates, even though you think there's going to be a drop at some point.
Yeah.
But you're seeing rising interest rates. You're seeing
gold.
You're seeing protectionist
gold
rhetoric regarding bringing jobs back and taxing overseas jobs, et cetera. So bringing all that in.
Right.
You're seeing conversation around deregulation. You're seeing conversation around.
But the piece that you're missing, Dan,
infrastructure spending.
But let me tell you, one thing you're missing is one of Trump's biggest one of the things he talked about was bringing back the money that's overseas.
Correct. Repatriating the money.
Repatriating the money. You know how much money is out there? We are like $30 trillion in debt. And I think the last time I heard there's almost like $10 to $15 trillion of dollars in other countries. And Obama did not.
It wasn't really anything he didn't look at it.
He wanted 35% of it. Okay, well, so what Trump's saying is he's saying give me 5% and bring all that money back. So if all that cash comes back, it's got to go somewhere. It's going to go into our bonds. It's also going to look at it in
a realistic way.
Yeah. So I mean, that's something to think about, and that's also what that's going to do is because there's going to become all this extra cash that it's also going to free up a lot of the loosening of the guidelines. There's money that's going to be wanting to be lent out.
That's right. So we've been talking a lot about how the market is going to shift. You're seeing the very early signs of it.
Right.
What'll be interesting now
I want to
have such a.
I want to know after break, Dan. I want to hear your perspective on what's going to happen in the housing market.
Well, you have such a major shift in policy, in energy, and feeling, and rhetoric, and everything is different today than it was 2 weeks ago.
Correct.
Absolutely different.
Right.
And so, I am totally open here to being wrong on. What does this do to the market shift that we see coming? Now, it's coming anyway,
right? Because
it always will be coming. There's never going to be a permanent rise,
right? But I'm curious if your position is going to change from what you did make some comments.
I think what you now have is there's going to be more temporary upside, but I think you're going to have a harder fall. So we've been predicting this shift coming sooner than later, but not being too big a fall.
Right.
Now I actually see you getting a little more temporary upside, but a bigger, harder fall on the other side of it. That's what I see coming. We'll see who's right. And again, at the home selling workshops that are coming up.
I'm making faces at Dan. That's why he's saying that, but go ahead.
Well, we're gonna have a lot more clarity around this issue. We're going to have an expert conversation around how the new presidency will affect housing. And you might be planning on selling now, but you might be planning on selling a year from now or 2 years from now. How will that affect your equity position? Join our free home selling workshop. There's tickets still available. No, it is November 30th at either lunchtime, 12:15. We actually serve a boxed lunch, or 6:30 after work. There's going to be a time convenient to you. Call this number to get your free tickets. It's 800-676-2420, or visit online SanDiegoWorkshops.com. That's SanDiegoWorkshops.com. Get your free tickets and learn how you can net upwards of $62,000 more on the sale of your home. You're listening to Daniel Beer and Todd Pianin. This is Real Estate Exposed on News Radio 600 Kogo. We're coming right back. listening to Real Estate Exposed. We're back. Segment number 3. An awesome Sunday morning. By the way, one thing we haven't talked about at all today.
What's that?
Our Chargers, who might be the best team in the league.
Yeah. Yes.
Actually, they really might. That's a sad thing about the record is they actually just might be. Wishing them luck against the Dolphins today. But let's just jump in here.
The stadium didn't get approved, dude.
Yeah. Well, that wasn't a surprise because they needed 66%. It would have been nice to at least have the vote come in over 50, and that would have, it'll be interesting to see how the motivation changes. I know Spanos has come out with a statement, but something he didn't say in his statement explicitly was we're going to continue to fight to be in San Diego.
Right.
And then again, you can't blame him. I'm not talking crap about Mr. Spanos.
No,
you cannot blame the guy. He's millions of dollars in, and the city didn't even give him a 50% vote. I think it's absurdly short-sighted. It's just an epidemic of, or it's a symptom, I should say,
but it would have cost
people
us
having an issue with a quote-unquote rich guy getting something for free when the reality is $650 million were being contributed by the Chargers and the NFL. The rest of the money by increased taxes from tourists.
Hotels.
And by the way, we actually do not have the highest hotel taxes in the country.
We're the lowest.
We
have the lowest.
We could afford the 5%. Yes. No one is planning their vacation in miserable, somewhere in
Alaska.
There's no one in Cleveland planning a vacation to San Diego to get out of whatever, their environment and say, honey, you know what? Forget the San Diego idea. Their hotel taxes just went up 5%. No one's saying that. And it's going to bring more tourists in anyway because you have all these amazing events that would be taking place.
Yes.
And you cannot overestimate.
I'm so upset about this. Don't even get me started. Let's go back to this. I'm so upset that this cost us San Diego. The world-class city. You people in San Diego are. I'm sorry to say this, and this may cost me loans or business down the road, but we deserve to have a world-class stadium. And I'm sorry, Spanos was giving and the NFL was giving us $650 million. It wasn't costing us any money.
And they were giving us a team and an environment, and it's just like putting parks or museums into a city. It is part of having a world-class city as you have an NFL team, especially one with the rich history of the Chargers in our town.
You want to hear the best part of this thing? The
best part?
The $650 million, let's talk about rich old guys, is more money than Jerry Jones put into the Cowboy Stadium.
Yeah, but
the
Todd,
AT&T Stadium.
I can't fathom a rich old white guy getting free money. Right? That's how people feel.
That's just wrong.
But the reality is that
I want
that's
my
just
Chargers
being invested back into the community.
I don't want to be an American. I don't want to be an America's team favorite forever. I want to be a Charger fan. I want a beautiful stadium. I want something.
We'll see if they could still pull it together. I mean, the reality is they didn't expect to win the vote because of the 66% that they needed to reach. But I think psychologically not breaching 50% does have some kind of toll if you're the Spanos. And again, who could blame them? If we have the opportunity to vote again sometime down the line, look at what Petco Park has done for San Diego. Look at the amazing things that go on down there, the amazing events that go on down there, the restaurants, the hotels, the commerce. It has given life to what is now genuinely America's best downtown environment, literally the best downtown environment in the United States. That was all given life by Petco Park.
Agreed. So let's jump back to what's happening in the election besides, let's talk about Trump. And I want to talk about Trump in regards to what you think is going to happen to the real estate market.
Absolutely, because you are listening to Real Estate Exposed, Dan Beer of the #1 Keller Williams team, both by sides, meaning homes sold, and by volume. And Todd Pianin, one of the country's most productive loan originators and really a loan expert at Home Street Bank. So what is the effect of a Trump presidency on housing?
Yes, let me ask you. So if I'm thinking about selling in the next three months, would you say now's a good time to sell? Because before Trump gets into office? Or would you say it'd be better to sell after Trump's in the office?
Look, here's the one thing that Trump for sure has brought to the table, and it's uncertainty. When you have uncertainty, it throws everything off, right? I mean, you see the rising rates over the last week. You see a rising, You see a rising stock market over the last week. I do think in the long term, my prediction, Todd, though, you think there will be a dip at some point.
Yep.
I wonder if you think that's a temporary or a permanent dip, because uncertainty typically isn't where, if all the foreign money that's in the United States that pours into our bond market looking for safety, uncertainty doesn't create safety. It's just the opposite. So I actually see a continuing uptick in interest rates. The bond bubble is, for, I think, the most part, officially starting to lose air, and air that it will not recuperate. We're going to see an upward interest rate market, and it is a great time to sell for a couple of reasons. One is that we're heading into the holiday season, right? We're heading into the winter, where most sellers think they should be waiting until summer. So you actually get a very low inventory environment in which to sell your house with very little competition, and you still have so many buyers in the marketplace that what we experience is the most serious buyers are out this time of year. They're not just looking around, but rather they're actually relocating. They are having a life change. They've had a life event, right? Whether it be marriage, divorce, kids, death, all of these life events, loss of job or a new job or a relocation, all these factors that drive people to have to move. That's fully in play.
Well,
and all of your competitors, meaning the other people that are also going to sell their home, because when you're selling, you're competing against the other inventory available. They're asleep at the wheel. They're in hibernation until, let's call it March or April. You take advantage of that now.
Well, I just have one comment. I mean, because you guys listed a house in my neighborhood, and I think it sold in like a day. I mean, my question is, and this is pre-election, it sold for a day, and I think that when I was talking to Joe last week, you're about to take another house in my neighborhood, same floor plan, I think, is a listing you're going to get in my neighborhood. So don't stalk me, people. But I mean, it seems like time on market for the Beer home team is way shorter than time on market for other people.
Well, the market average, and I don't have the number actually in front of me because I haven't updated it in about a month, but market average is right there at about 40 days on market is the average.
Right.
Okay. Now, ours is 14. Ours is 14 days. Now, the market average
So 14 days.
On average, we'll sell a home in 14 days.
How do you do that?
Well, it's all about our 5-day blitz program. And really, actually, it's everything we teach at the home selling workshop. It's coming up November 30th. We offer it twice that day. That's really the one place where we lay out the entire process, the whole blueprint of how you have a home predictably sell in a short period of time, how you net more money, how you look at staging, how you look at home improvements, how you get all that to play in and really work with buyer psychology, using it in your favor. The traditional process pins you up against the buyer. The process we teach you is how to pin the buyers up against each other so that best and highest price can emerge and you can get what we call a full market response. All that is taught at the home selling workshops, and it's a special edition of the workshop because, of course, it's post-election. So we're going to also see how the election and a Trump presidency will affect the housing environment. Well, obviously, we've been discussing that today, but we're going to update you on that after a couple of more weeks' clarity as we see how things shake out. Number, if you want tickets to that event, is 800-676-2420. That's 800-676-2420. You can go to SanDiegoWorkshops.com as well. You're listening to Real Estate Exposed with Daniel Beer, Todd Pianin. But what I want to talk about coming out of the break is that there's more reason that it's actually a very interesting time to sell your home. One has to do with the pending home sales report.
Right.
Two has to do with the amount of time that current home owners have been in their homes. And there's very strong reason to believe there's a great portion of homeowners that are right now not in their best and most ideal house.
Right.
And we'll see why. And then the third reason has to do with rhetoric coming out of the Trump camp. So we're going to touch on all that. That's next. You're listening to Real Estate Exposed. Dan Beer and Todd Pianin. Welcome back, Real Estate Exposed with Daniel Beer and Todd Pianin. Last segment before we head to NFL Sunday, and we're discussing the three reasons the three ways in which housing and the environment right now make it so that it's a very interesting time to sell your house. There are certain advantages. In the last segment, we talked about the low current inventory, not just the low inventory we've had over the last year or so, but the especially low inventory as we head into the winter season where all of the other sellers will be asleep at the wheel waiting for the spring and summer. Well, there's a lot of buyers out there that are trying to find the right home, which you can take advantage of. Now, here's the beauty. There's 3 other reasons that it's a very interesting time to sell. One,
Hit me.
The pending home sales report.
What'd that say?
Okay, the pending home sales report.
Is this national average or San Diego County?
Now, this one's national.
Okay.
We're going to come, we're going to get closer to home here in a second. But the report announced that pending home sales were up 2.4% over last year and have increased year over year now for 22 of the last 25 consecutive months. Now, I see that as very good news, but I also see that as, wait a second, 22 of the last 25 months. Do you think that story is going to be one day 40 of the last 45? Or do you think maybe we're heading towards some sort of a crest? I believe we are, though we did discuss in the last segment as well that I do think that upside is going to be extended temporarily by Trump's presidency, but then we're going to have a harder fall. That's just my prediction. Now, here's a second reason. Time that people live in their home is that's a metric that not a lot of people study.
Right.
But it's a very interesting one to look at.
We've been studying it over for the home selling seminars. We've been talking about it.
Absolutely. This is something that we look at constantly.
Right.
Because over the course of years, and I'm talking going back to the 80s.
Right.
Okay. The average time that somebody stays in their house, a homeowner stays in their home.
Right.
Here is 6 years.
Across the country. This is across the country.
And that's across the country. I love that you bring that up because this is a national statistic as well. And it's a fact that across the country in the Midwest and parts of the East Coast, people actually stay in their homes there longer than they do here in Southern California. Which means that our average is probably even less than that.
It is. Usually 3 to 5.
So 6 years national average.
Right.
And this has been a consistent number literally going back to the 80s. Now, what do we have today?
Well, after this is post-crisis, this has changed dramatically post-crisis.
Here's what you have. You have it went from 6 years to 7 to 8 to 9. In 2011, we reached a 9-year average, meaning people that own their home had been in their home on an average for 9 years.
Before they sold.
And it stayed at 9 years and 9 years and 9 years. Actually, went back up to 10, went back down to 9. But here's how I read into it. What that tells me is that you have such a deviation from what had forever been the norm that you most likely have people in their home right now who current housing.
You have more pent-up demand than is actually on the books and people are talking about is what you're probably going to say,
What
right?
I believe is that there's
people
a large portion of homeowners that are not in a house that is in the best interest or best for their current family circumstances. Right. So they could be baby boomers living in an empty, 4-bedroom house.
Right.
Or they could be a millennial couple planning to start their family that currently live in a 1-bedroom condo.
Right.
You have people that have been staying in their home longer than what history has shown us. Why do people move? They move because they have changing family circumstances or life circumstances. And that's not all of a sudden different in the late 2000s. In our last 5 or 6 years.
Right, but what's been different is it's been harder to get mortgages. It's been harder to values have went down.
Absolutely.
Right.
So when you play that in with deregulation and just the fact that people are not living in their optimal housing situation for their family,
right.
You have inventory that's going to be hitting the market in a bigger way than normal. You're going to start having growing inventory.
Right.
If you're a seller today, you want to be ahead of that.
Correct.
Now, let's go to Trump. As we started the show with Trump, we should end the show.
And the show. And the show with Trump.
And the show with Trump. Something that not a lot of people talking about, but that'll have I think it could be an interesting monkey wrench in housing, is there's a lot of uncertainty around immigrants as far as what now for us. What does it mean? Am I going to be deported, or will my family not be able to return?
Right.
Right, because I have family that left to wherever, some other part of the world for 6 months? Are they going to be able to come back? Is this now no longer an immigrant-friendly country? I'm just saying that this is what immigrants are asking themselves today. And immigrants make up a very significant percentage of home purchases. Immigrants, especially along the coast.
Home buyers.
Oh, yeah.
Right.
Along, when you're looking at Southern California, Miami, New York, immigrants make up a very important portion of home purchases. And when they have the uncertainty of not understanding what a Trump presidency means, how much of it was just what he was saying during his election, during his campaigning, and how much of it is going to be real, how much of it will be implemented. Look, it's fear-based. I get that. But that creates enough uncertainty that it could put a little bit of a pause or a little bit of a monkey wrench in the housing market, especially in your major coastal cities. That will be interesting to watch. So before that gets even deeper rooted, go ahead, give us a shout, and we can discuss your home sale. We could also discuss free tickets to the home selling workshop. They're yours as they're still available. Here's the phone number for you, 800-676-2420. It's coming up March 30th.
November 30th.
Excuse me, my goodness.
You are moving ahead, way ahead in the future.
November 30th, it's a Wednesday. We have a noon session and an after-work session. Get your free tickets at SanDiegoWorkshops.com or call 800-676-2420. There's probably never been a more important workshop to attend than this post-election edition.
This is Todd Piana for Home Street Bank. Remember the FDIC Equal Housing Lender, NMLS ID number 304014. Glad to be back with you on Sunday, and go Cowboys!
Oh, my God. Please edit that out somehow. I wish we